All right, traders, welcome back to the channel. We're going to go over a little bit of a different viewpoint on AMC going into today. A little bit of the technical analysis, but not too much there. I want to focus on a key thesis of kind of how I see the market moving and how people are making their bets on the market. Now, everyone remembers you had your Netflix major drop, right? Everyone remembers going back to Netflix. You had your major drop back in January after those earnings. Big dump down to basically 50, and you're kind of sitting at those lows right now. How do you move forward? What's going on here? And are you ever going to fill that gap back to the top, right? And this is leading back to AMC, right? And before we even get into the content, you got to check out the podcast. Link is down below. Every single Saturday, more episodes coming out for you, the people, absolutely free, not even monetizing it yet at all, just for you. Make sure you check it out. Trey was on it last week. Rogan was on it this week. Who's going to be on it next week? We'll have to wait and see. Let's get back to it. Another big thing there was you had Bill Ackman. Everyone knows Pershing Capital, CEO, manages their money. He ended up buying about, I think it was like 1.2 billion worth of stock in Netflix on the dump. It ended up bouncing from 350 back to like 450-ish? It had a huge bounce. Massive bounce. It was really great. People made money on it. Great play. But I want to highlight how he made his money to make the investment on Netflix, right? Because this is where Pershing Capital really made their big play. So in 2020, they made money on the crash. Were they betting heavily on the crash? No. Were they hedged for it? Yes. And this is kind of the thesis behind the latest videos, right? So Ackman said that Netflix purchase was funded by a 1.25 billion purchase and proceeds from an interest rate hedge. Ackman is known for these types of hedges, having made that what writer Bill Cohen called the greatest trade of all time in 2020, turning 27 million hedge against the stock market based on interest rates to 2.6 billion in profit in 2020, being one of the head leading firms in 2020, really putting his name on the map. Like, again, one of the best trades ever. So he basically funded this whole position with this, and he's one of those people going all in on overall streaming, right? So I want to highlight that. Now, he's not saying that, movies are going to crash or anything like that. He's just a big better on this overall surface and what's going on here. But even those people are putting their money in a position of a hedge, even though they're going heavy on the longevity of the stock. Because again, if you're looking at, let's say, Netflix, right? Over the course of the next 10 years, Netflix is going to grow. It's going to do well. Streaming is exploding. It's going to do well. No one's not denying that. It's not the question. Even AMC stockholders aren't saying Netflix is going to crash. They recognize streaming is the way people are really watching their everyday TV now. It has shifted. Now, I read this in my last video, and I kind of went over this more, going over all of this right here. You can go check that video out right here, going over Bill Ackman, things like that. I'll probably make another one going over this as well, just a little bit deeper. But he's basically saying that he sees exactly what's happening right now. And I'm just going to read the first part. In January 2020, I had nightmares about the potential of a pandemic, but everyone seemed to think I was crazy. Again, this gives you the same census as coming back to the latest videos over the past month and a half is World War III, possible war going on. People saying, Tyler, no one's going to invade Ukraine. No one's going to invade Taiwan. It's never going to happen. And he's saying, I have similar nightmares now. WWE likely has already started. We have been slow to recognize it. Putin has already invaded Ukraine and is not going well. It goes on and on and on. But yet they recognize he's being honest. No one's recognizing, no one's coming to that thesis. And where does it come back on AMC? I do believe people are short on AMC. And this is the difference, in my opinion, between his position on Netflix and other people's position on AMC. Because you don't have too many hedge funds long on AMC, right? They're mainly short. And this comes back to the thesis of people having to cover, things like that. I do believe if the economy starts to take a hit, I still think AMC will do well, fundamentally based on how they're performing, growing, things like that. It's even showed with a declining savings rate, with a declining market, which we have seen with inflation occurring, AMC continues to grow back to where it was previously. That's very good news. So it's sustaining kind of that test of time, right? But there's a key thing that we need to be looking at, and I don't believe all hedge funds are based like Bill Ackman, right? He is known for doing these hedges. He's a known hedge fund trader. He is known for going big on plays, but being very secure in the hedges so he still profits no matter what. And that's what I've been talking about with the market. And that's why in my last video I mentioned VIX. VIX is pretty beautiful if you're looking at it right now. The put to call ratio. The calls are really leading. For every one put, there's 10 calls. That's just on Friday. So people are betting on some type of pullback and they are hedging. But the question is, are companies like Melvin Capital that are heavily on the put side and on the downside and shorting this thing, are they hedging their positions? And that's really where I want to start looking more into here on the channel as well. I've already mentioned the downtrend that AMC is in, the descending wedge it is in it, everything like that. In my opinion, if you start to get any sort of bounce, AMC is going to start getting a massive influx of volume and shooting back to the upside. That's, in my opinion, very similar to how he traded this. I know people are like, well, Tyler, this is a totally different type of hedge, things like that. I don't believe shorts are hedged in the correct way for this move right now with Russia and Ukraine. What does that mean? So for instance, if you're trading the pandemic, people were hedged on interest rates, they were hedged on different parts of the market. We understand that part of it. But on the short side of it, short sellers, in my opinion, are looking at this, are like, this is exactly what we want in the market, right? Everything's kind of just being pulled down, it gets bought up, it gets just shot back down. So I don't believe they have the necessary risk level that you'd be looking at, such as Bill Ackman. For instance, normal hedge funds are going heavy on the blue chips, and then they'll put some, puts or, calls on VIX and SPY. They're going to hedge those positions, right, over a lengthy period of time. You can see this on the option book. You can see it on the overall flow. We'll cover that again in another video. But you can see that happening, and I just don't believe shorts right now, looking at the scale of the market, feel the need to cover their positions in a way if you do start getting a rebound on the whole market. And I am a bear on the market. I'm a bear on SPY, Nasdaq. I'm a bear on all of it right now. But by some chance, this stabilizes and AMC and SPY start to go up, I don't think shorts are in a position for themselves. This is just my overall thesis, and just my viewpoint. Again, looking at the technical viewpoints of it, you're in a bear flag, and it looks like it wants to push back down and test those $13.7 to $14 region. But the real question comes back down to what Bill Ackman was doing here. And this gives you an inside look to how these hedge funds are moving. Are they hedging their positions? Because right now we're in a lot different position than we were in 2020, 2021. Because we saw in 2021, a lot of those short selling companies got toasted. They got absolutely railed. But things are different now because we're kind of in this idea that you're in a perma bull market, right? And I just don't think that they're preparing, and you are getting rejected on some of these levels. But with some of the things happening, I think positions specifically, like I said, to the short side are getting over leveraged. So what you're going to want to watch for, and what I'm going to be doing is looking more into those positions and seeing how they're hedging. Because if you are not hedging, that is the ultimate level of risk, and that's what I'm going to be watching here on AMC. Now, I may have confused some people. I'll try to break it down further, and that's what I'm going to be looking more into in this coming up in the future as well. That's from the video up. If you got anything else, please like, subscribe. It helps out the channel tremendously. More content is coming. The Discord and Twitter links are down below for all the content daily. Remember one thing, we run the market.
I got no drip in my pocket. Must have forgot it, or maybe I already lost it.